Welcome back, my beautiful friends. You're listening to A Moment of Zen right here on 710 WOR, the voice of New York. I'm your host, Zen Sams, iHeartRadio. In our Business and Buzz segment brought to you by Revere Securities, we're chatting with non-executive chairman Kyle Wool. And today we are joined by Alexa Rose Carlin. She's a keynote speaker, author, and CEO of Women Empower X. Today we're chatting about the ongoing inflation crisis in America, how to stay ahead of the curve, and what the next 12 months look like for the overall economy. Federal Reserve officials and their counterparts around the world are trying to defeat inflation by rapidly raising interest rates, knowing full well it will come at a cost. Inflation has been relentlessly rapid for a year and a half now. The longer that remains the case, the greater the risk that it's going to become a permanent feature of our economy. What happens in America affects the entire world. Case in point, one day after the Federal Reserve lifted interest rates sharply and signaled more to come, central banks across Asia and Europe followed suit, waging their own campaigns to crush an outbreak of inflation. Policymakers around the globe are simply worried and downright frustrated. And here to chat some more are my experts at hand, Kyle Wool and Alexa Rose Carlin. Welcome to the show, my dear friends.
Thanks for having me.
Yep, thank you.
Kyle, let's start with you. So many economists think that what happened in the 1970s when the Fed tolerated out of control price increases for years and allowed an inflationary psychology to prevail and later proved excruciating to crush. They're fearing that's about to happen now. What are your thoughts?
I think there's a possibility it could happen. Do I think it will happen? Probably not. I think we have some very positive things on the short-term agenda. I think we should have an election, if you look at most of the forecasts, that should swing the House in a different direction. And gridlock is very good typically for the economy. And I do think if the other party takes control of the Congress, we will not see the rampant spending that we're seeing today. And I think that'll help tamper inflation, because inflation is not just controlled by the Federal Reserve Bank. Monetary policy is important. It's also important to control spending, to control the monetary supply, how much is out there as well. And I think if we can control the spending, if we can continue to raise rates, and I don't think we need to raise them that much more. I think maybe another 75 basis points. And if we can get a little help from our friends in Eastern Europe and tamper that war down, I think you'll also see some of the commodities such as oil, gas, and wheat come down as well. And if you can have those three together, kind of like the three a year ago that started this, those three can kind of bring it down without having to raise rates like Chairman Volcker to 20%.
Yeah, exactly. Because if you think of it, in the 1970s, the Fed policymakers did lift interest rates in a bid to control inflation. But to your point, they backed off when the economy began to slow, and that allowed inflation to remain elevated for years. And when oil prices spiked in 1979, it reached untenable levels. The Fed, under Paul Volcker, ultimately raised rates to nearly 20% and sent unemployment soaring to more than 10% in an effort to wrestle the price increases down. And that example seems to weigh heavily on policymakers' minds today. Alexa, already the moves are beginning to have an impact. Climbing interest rates are making it more expensive to borrow money to buy a car or a house in many nations, and mortgage rates in the United States are back above 6% for the first time since 2008, and the housing market is cooling down. The markets suffered this year in response to the tough talk coming from central banks, to Kyle's point, reducing the amount of capital available to big companies and cutting into household wealth. What is your advice to women out there who are managing their household finances and are trying so desperately to balance the family budget?
Yeah, I mean, the first thing that I always tell everyone is that knowledge is power. And when you have a good understanding about where your money is, how much is coming in, and really that safety net, I think that it's super important right now to make sure to have somewhat of a safety net and really focus on building that, because the future is unknown. And right now, like, a lot of people are looking to fear and unsure of like the spending habits, unsure of what's happening even like with the holidays, or can I buy a new house? Can I get a new car? And so if you understand your overall financial health, it helps a lot. Also help you feel secure in making those choices, and definitely make sure to talk about it with your partner, with your family. That's very important. Me and my husband talk about our finances every single day, and we are on the same track with goals. So it's really about balance, because fear is never the answer. And so I think it's just really important. The first tip is to make sure you understand your complete financial health and know what you can spend money on, what you can still enjoy, as well as where you're saving for, if it's a house, if it's a car. And do you need those things right now, or can you hold off with that purchase?
Yes, financial literacy is what it boils down to, and that's at the heart of it all. Kyle, rates are rising from low levels, and the latest moves have not yet had time to fully play out, so to speak. And just recently, we just saw these numbers, with the Feds. But in continental Europe and Britain, the war in Ukraine, rather than monetary tightening, is pushing economies towards recession. It's different here. Here in the United States, the fallout from the war is far less severe. Hiring in the job market remains strong, at least for now. Consumer spending, while slowing, is not plummeting. That's why ultimately the Fed believes it has more work to do to slow down the economy, even if that increases the risk of a downturn. This feels counterproductive. Many economists would disagree. What are your thoughts?
Again, I think we have to take interest rates in context, right? They just went from 0 to 3, right? Now, if you look at them historically, okay, sure, the mortgage rate went from, you could get a 30-year mortgage at 250 to probably 6.3 right now. These are historic normals, okay? This is not 12%. This is not 20%. Like when my parents probably bought their first house in the late 1970s, they probably had a 24% mortgage when interest rates were at 20%. Everyone nowadays in the world that we live in, it's the next tweet, it's the next thing, it's whatever happens on the next internet, right? But this is the mean average. 3% is a pretty healthy place. It's good for a healthy economy. If we go to 3.75 or even 4.25, okay, maybe it's a little high. It's not the end of the world. People should get more comfortable with this. Now, one thing that it may affect people is access to easy capital. People are used to using their HELOC to borrow money very cheaply. That's not cheap anymore. That's me 5.5%, 6%, 7%. You want to borrow money off your investment portfolio. I'm an investment person. People borrow money off their portfolios. That's no longer 2.5%. That's going to be 5, 6, 7, 8%, depending on how much capital you have. And that's a life lesson for people that when you do have historic lows like we had for the last 5 years, maybe not a bad idea to lock in a 30-year mortgage. Take advantage of these things. A lot of people haven't been in the markets that long, and history is not a guarantee of the future, but it's a pretty good indicator. So I would say I wouldn't get nervous. It's a historic average that we're at right now.
Yeah, it's true. And, if you look at it from the bigger picture, this isn't the 70s at the end of the day. And inflation hasn't been elevated, to your point, for as long. And supply chains appear to be healing, and measures of inflation expectations remain under control. It's not totally out of control. Interestingly enough, Mr. Brooks at the Institute of International Finance sees the pace of tightening in Europe as a mistake, and thinks that the Fed, too, could overdo it at a time when supply shocks are fading and the full effect of recent policy moves have yet to play out. So, we don't know where this is going. But Alexa, I'll flip this one to you. How can families stay ahead of the inflation curve, Alexa? And what advice do you have to the individual who is trying to get onto the proper path to financial freedom?
I mean, the best way to stay ahead of the financial or the inflation curve is to make sure to look at, how that's going to affect you. Like, are you looking to buy a new car? And then if you are, can you buy it now before we think that the price that it's going to go higher? Or can you sustain with not buying a new car? And maybe, like, how long is that going to be? Is that going to be a year, or 2 years? So it's really understanding sacrifice and where is this going to affect you? Because if you look and listen to all the news out there, it's not every single thing is going to affect you and your family. So that's really important. And for the individual, I think it's about, again, the knowledge, but also understanding the sacrifices. It's not forever. I think that a big problem with especially my generation is that we look online and we want to buy all these fancy things to keep up with, like, the influencers and the social media. And a lot of those things are people that are in a lot of debt. And so it's thinking about, what kind of life do you want? And what does that look like? And what's important to you? Is family time to go out to dinner important to you? Maybe that should be in your budget more so than buying, a brand new wardrobe or car or designer bag, whatever that looks like. And so for the individual, you really want to think about, what's important to me and what do I need to factor in my budget so I can still live my life to the fullest that I'm able to, as well as plan for my future and make sure that me and my family are okay.
Well said. Well said. Kyle, and of course, we can't forget Alexa, making sure that we have a great financial advisor on our speed dial to be able to make sure that all our investments are being done properly, safely, and effectively. And that's what I love about Kyle at Revere. You guys are very, very hands-on. You know your customers very well. You know everything within the portfolios and everything that you're looking to make investments and pull the trigger for. So Kyle, very, very trusted source. Kyle, where do you think we're headed overall in the next 12 months? What's your opinion? And what asset classes seem the safest to invest during this volatility really to hedge against inflation?
Yeah, it's a really good question. And I like what Alexa's talking about, the day-to-day prudence of how to run your household. I think that's very important. I think it also goes to your portfolio. It's very important. Now, if you look at the stock market over time, the stock market goes higher. Good times last longer than bad times last. We're in a difficult economy right now. I think the economy is strong, but the market looks bad. You see the Dow Jones Industrial Average and the S&P 500 have come down quite a bit. It actually broke 30,000 on the downside the other day. So what are you doing this time? Do you sell all your stocks and run away? Probably not a good idea. They're probably going to be higher over the next 12 to 18 months, right? But you start to look at, okay, maybe rebalancing the portfolio, right? Saying, you know what, in a difficult time, consumer staples are still going to do well. Like Alexa was saying, you're still going to go shopping. You're still going to buy toilet paper. Companies like Procter & Gamble and Coca-Cola, Kraft Foods will continue to do well. Maybe if you're looking for some yield, energy stocks, energy is doing quite well. We've got a 4.5% yield. Not a bad thing to look at. Utilities do well in this kind of market as well. People are still going to use electricity. And again, you're always going to have tech stocks that are out there. Maybe not bad to pick up some Apple cheaper than it was, 30% off the highs, to pick up some Amazon. Would I go out there and trade Bitcoin and Riot Blockchain? Probably not. But I do think it's a time to look at your portfolio, see where you're positioned. If some of your gains have outpaced where they should be in your asset allocation model, maybe bring those back and be a little bit more defensive. But the next thing you know, typically in the markets, when the woe is near and the end is near, et cetera, markets usually do pretty well. So when the average investor gets scared, you should be greedy. And when the average investor is greedy, like they were 6 months ago, maybe you should be fearful. I think Warren Buffett said that best many years ago.
I like that. I'm going to coin that. That's going to be the new president of Revere Securities quote.
I think Buffett might sue me for that, but I think he trademarked it.
He probably did, but you just put your own spin on it. I love it. Well, listen, we're almost out of time, but Alexa, any closing thoughts?
My closing thoughts is, the more that you can be knowledgeable about, again, your financial health, your budget, where your goals are regarding what you want to spend on, how much you want to have saved, that's going to be the power through this time. And don't result to taking in all this information and hearing and believing everything that you hear, because fear is definitely not a good place to be. As long as, you have that safety net and you understand what you're spending money on, how much money that's coming in, I think that you're going to be fine.
Oh, awesome. Awesome work. Thank you so much. Wise words, my dear friends. Kyle, thank you so much for coming on and shining us with your knowledge and making sure that you're always guiding us in the right direction here on our Business and Buzz segments.
Thank you. Thank you, Zen. Thank you, Alexis.
Thank you.
Alexa, thank you so much for coming on. It was a pleasure having you.
Thank you for having me.
Guys, that was our Business and Buzz segment brought to us by Revere Securities, one of the most trusted broker-dealers right here in New York City, with such an array of investments and portfolios and really a personalized one-on-one service that they offer to their clients. You definitely have to check them out, reveresecurities.com, and check out Alexa at alexacarlin.com. You're listening to A Moment of Zen right here on 710 WOR, the voice of New York, iHeartRadio. We'll be right back after this.
A Moment of Zen is brought to you by Revere Securities. Revere is committed to building a relationship of trust in which they work closely with you to help you define your objectives, explore alternatives, and choose the financial and investment strategies that are most appropriate for you. Go to reveresecurities.com.